Hey guys, Tony here. Welcome back. Let's talk this Q1 2024 results for Hycroft Mining. What the heck is a baby shelf, and when is this company gonna get mining again? As a reminder, I do not own any Hycroft Mining. I merely provide these videos as a service to you to update you on what is important going on at Hycroft. There is a lot of constant misinformation and misunderstanding about what is going on at Hycroft. So as quickly as we can, sticking just to the facts, let's get right into it. Hycroft Mining is a junior mining company, not actively mining. They are in an exploration phase, hoping to relaunch the mine maybe in the next year or so. More details on that in just a second. They closed the trading day today, May 7th at $3.41. Just to refresh your memory, AMC Entertainment, the movie theater company, invested $27.9 million to acquire a substantial stake in Hycroft Mining back in March of 2022. Since March of 2022, since Hycroft is not actively mining and is not generating any real revenue, the price of the company's stock has come down. Due to the decline in price, Hycroft did a 1-for-10 reverse split in November of 2023 to bump the price up and make sure that they stayed listed on the big boards. And for all of you who say that reverse splits always cause the price of a stock to fall, not true here. The stock price is up over 100% since the date of that reverse split. Remember guys, it is not the reverse split that makes prices fall. It is the threat of dilution after that reverse split. And since Hycroft is not actively diluting, we haven't seen the price go down. In fact, we've seen it go up. As I said to you on many other stocks, and I know some of y'all hate to hear this, reverse splits don't mean that the price is going to tank. Again, it is the threat of dilution in combination with reverse splits that make the price tank. So as you're looking at reverse splits, always ask yourself, is there going to be dilution involved? And then you can have your answer about what to expect the price to do after that reverse split. Now let's move on to the Q1 results for Hycroft Mining and touch on the highlights. We'll look at the financial statements real quick and wrap this up. Things that the company wants to highlight to investors are here on the press release. The balance sheet has $57 million of unrestricted cash. They used some of their cash in Q1. We'll talk about that when we look at the balance sheet. The company did tap into their ATM. We'll talk about that in just a second. They sold 517,000 shares, a very small amount, raising $1.2 million. And on March 28th, 2024, the company announced that effective May 1st, 2024, they would be included in the Solactive Global Silver Miners Total Return Index. So that is now in place. As mentioned, the company is not actively mining. They are exploring, and during the first quarter of 2024, the one we just finished, the company continued its exploration drill program, including analyzing data and information compiled from drilling testing that they did in 2023. They also have the 2024 drill program, which began in February of 2024 to follow up on the high-grade underground silver discovery announced in November of 2023. There is more drilling and exploration still to happen this year in 2024. As they are analyzing those results, they are doing analysis and deciding what the plan is going to be for getting back into mining. But they have an update here for us on the potential of generating additional revenue when they get back into mining through sulfuric acid. Hycroft's sulfide ore has the potential to generate the byproduct sulfuric acid, and the revenue from that may create significant economic benefits for the project in addition to the gold and silver that is in the ground. The company has initiated additional metallurgical studies to determine if utilizing roasting technology instead of pressure oxidation technology would deliver superior economics for the mine. I know the number one question that investors in Hycroft, potential investors in Hycroft, and haters of Hycroft all ask all the time is, when is this mining operation going to ever get back into mining? And the CEO has a few words for all of you here in this letter. Trade-off analysis needs to be completed on those two different technologies, the pressure oxidation versus the roasting, and that will be completed over the coming months and is critical to ensuring value is maximized for shareholders. In addition, the recent high-grade silver discovery and ongoing 2024 exploration drilling is providing beneficial data towards the potential of an underground underground starter mine. This additional work is expected to be completed over the coming months, and the company will provide updates on the anticipated timing of the process flow sheet, which is what I am waiting to see, and the associated technical reports as information becomes available. So I was hoping that they'd give us a date, but we don't have a date. They were telling us we'd get some update on the plan by the end or by the second half of 2024. I don't see them committing to an exact date here. They're just saying when it's available, we'll give you the data. Furthermore, additional drill results in the newly discovered high-grade silver underground system are pending, with new drilling ongoing, and that information is important to incorporate into the mine plan. You don't just want to kickstart this thing and start digging into the ground if you haven't laid out a well-planned plan. CEO Diane Garrett closes by saying all of these components are integral to building a right-sized plan for bringing Hycroft Mine back into production. It is vitally important to design and build the best operation to ensure its long life. Prematurely going into production without exploring every possible opportunity for additional revenue and enhanced economic return is doing a disservice to a world-class asset and our stakeholders. So I know a lot of you are impatient. I know a lot of you are watching the price very closely, and I know a lot of you like to throw stones at Hycroft Mine, and I get all of that, but they are on their own schedule to do the best absolute planning that they can. And until we see the results of that plan, until we get the pre-feasibility study done and in our hands, it is too soon to judge whether Hycroft Mine will be a success or a failure. It is too soon to judge whether AMC's investment in Hycroft Mine was a good investment or a waste of money. We won't know those answers until all of their exploring and technical analysis is done, and that is going to require all of you to be patient. And then we can either pop champagne or throw stones, depending on what they end up telling us. Later this year, early next year, I don't know the date, but stay tuned. It is because of this uncertainty and me wanting to see the data that I have chosen for myself not to invest in Hycroft at this time. That is just how I am viewing it. That is my decision for my portfolio. You are free to do whatever you wish. Now let's touch on the financial statements really quick. This is going to be easy because the company has no revenue. On the balance sheet, assets, cash and cash equivalents, $57.5 million, down from $106 million in the previous quarter. We're going to talk about where that money went in just a minute. Current assets on the balance sheet, $65 million versus current liabilities, $6 million. So they are fine on working capital. Total assets, $152 million versus $158 million on total liabilities. The bulk of those total liabilities are their long-term debt, $116 million. On the income statement, no income for Hycroft again for this quarter. Not unexpected because they are not mining. The net loss for Hycroft for Q1 was $20.7 million, giving them a net loss of $1 per share. When we compare that negative $20.7 million to the same quarter in 2023, it was only $13.9 million. So why the big increase in expenses? Why the much bigger loss in 2024? Well, we can see this $10.1 million right here, and that is what explains it. Interest expense. Now, this was due to the way that they had to bookkeep this, accelerated amortization of discount and issuance costs. Let's look down a little bit more in the footnotes and see what this is all about. In terms of long-term debt, Hycroft has the bulk of it due in 2027, as you can see that I have highlighted here. The total long-term debt is $116.5 million. If we scroll up here and look at the breakdown on that debt, the bulk of it is subordinated notes. They had in December 2023, $42.5 million due on the Sprott credit agreement. They paid off the bulk of that money. Now here in March 31st, 2024, only $12.6 million still remaining on that. You can see up here in current debt, they had $2.2 million of the Sprott credit agreement, and that has been now wiped down to zero. When we look at the footnotes on what exactly happened, on January 5th, the company voluntarily prepaid $38 million of its first lien debt and charged $6.9 million for accelerated amortization of the original issue discount and issuance costs. So about $38 million was used to pay down debt, $6.9 million used for that accelerated amortization. We can cross-check this by looking at the financial statements here really quickly. We can see the reduction in cash from 106 down to 57. We can see the reduction in long-term debt from 142 million to 116. We can see in the cash flows that $37.9 million was used cash in financing activities for principal payments on debt. And on the income statement, remember they had that 6.9 in accelerated amortization. We add that in to the regular interest expense they have on their debt, giving us this larger $10.1 million of interest expense and accelerated amortization for paying off that debt early. If you have been following my updates, you already knew that Diane Garrett had said in recent speeches that their strategic objective was to continue to improve the balance sheet and to pay off some of this debt. This should not be a surprise if you've been keeping up with what's been going on with Hycroft, the actions that they took in Q1 to reduce the debt. This is why it is important to keep up with what the CEO is saying and the publications that they have been putting out. All of this was well telegraphed in advance. I want to close out this discussion talking about the baby shelf and any potential dilution that Hycroft might be doing. We know that they sold just over $1 million worth of shares in Q4, and you saw at the beginning of this video, they sold another 500,000 or so shares in Q1, raising just over $1 million again. You might have seen in March of 2024 this updated prospectus, and they explain this a little bit more in detail to us in the footnotes at the very bottom of this 10Q. On March 19th, the company filed a prospectus supplement subject to instruction IB6 to Form S3, which is referred to as the baby shelf rule. The baby shelf rule has to do with companies that have a market cap of less than $75 million. They go on to say that pursuant to the baby shelf rule, as long as the company's public float is less than $75 million, it may not sell more than the equivalent of 1/3 of its public float during any 12 consecutive months. So they are updating us here in the second highlight that previous to filing this updated prospectus in March, they had $360 million, which they could raise through dilution. Now, with the update due to the baby shelf rule, they are limited to $14.8 million as of March 31st, 2024. I know that I was concerned about the massive amount of dilution that they had open to them under the previous shelf offering. With this update, I do feel a little bit better. Yes, they might raise a little bit more money through dilution, but the amount that they can raise has been drastically reduced due to this rule from $360 million down to 14.8. Now, I say as a potential investor, that makes me feel better, but from their perspective, they're probably wondering what happens if we run low on cash. So a lot of moving parts here for you to think about. It just means that you're going to need to pay attention to how much cash they have on the balance sheet and what their cash burn is as they pay to keep the lights on and continue this exploration. Hycroft does still have $57.5 million of cash on the balance sheet, and we know that they're spending on a regular quarter about $11.5 million for operations and exploration, plus another $4 million or so on interest expense. So roughly what? $16 million a quarter of cash burn. And that is something as an investor that you're going to need to pay attention to in light of this drastic reduction in their ability to raise capital due to the baby shelf rule. That is all I got for you on the wrap up of Q1 results 2024 for Hycroft Mining. If you have any questions or comments, please leave them down below. I love to hear from you guys. I am Tony Denaro, and I will see ya on the next video.